This is the Asia Trade. I'm Shery in Tokyo.
And I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks are set to catch a tailwind from Wall Street's tech-driven rally. Jay Powell returns to Capitol Hill, still backing the case for Fed rate cuts in the coming months.
Also ahead, Bill Hwang guilty of criminal fraud over the Archegos collapse for lying to the likes of Credit Suisse and UBS.
Plus, key Biden advisors meet with Senate Democrats as more party voices question the president's decision to stay in the race for the White House.
And it's with that backdrop that President Biden makes his speech at the NATO summit. And we know that leaders have praised him for the strong speech that he gave at the 75th anniversary for the alliance, but at the same time we know that quietly they've been actually scheduling some meetings with people linked to President Trump, some saying that this is really distracts from the main agenda of the NATO meeting, including of course what happens to China and a draft communique that we saw that is going to call out China's military support for Russia.
And it comes at a time where we've seen, of course, this sort of charm offensive that you've been talking about with Russia, right? The latest being the meeting between Putin and Modi, and obviously India trying to tread that sort of fine line in that relationship with regard to the situation in Ukraine. But the other big event that we're looking ahead to, where expectations from economists and from investors have been managed pretty low as it gets underway at the start of next week, is the China plenum. And this is sort of the big gathering of Chinese leaders at a time where the economy remains in the doldrums. We had the CPI data suggesting that really growth continues to not really be firing on many cylinders at this point. Bloomberg Economics says that there is the firepower for Beijing to end the housing crisis, calling it the big bang solution. It would involve pumping money like the Fed, but it's unlikely to pull that trigger.
Yeah, the deflationary pressure in the Chinese economy continues. And of course, what will be also impacting the markets is the June CPI numbers out of the U.S. as well. Take a look at futures trading at the moment because we saw another record high for the U.S. We're talking about the S&P 500 topping that 5,600 level. Gold and silver mining stocks rallying on those Fed easing bets. We heard again from Chair Powell at the Senate hearing, really sticking to that script. He isn't yet confident the price gains are sustainable, slowing to the 2% target. Of course, the day before he spoke about those risks to the labor market if rates continue to stay elevated. We continue to watch the Treasury space for any reaction. It's remained fairly stable. The 10-year yield fell below that 4.3% level in the overnight session. We had a strong $39 billion sale of 10-year bonds, Heidi, but we saw crude prices also gaining 0.4% on that risk-on sentiment. But take a listen to what exactly Chair Powell said.
We want to be more confident that inflation is moving on a path sustainably down to 2%, not at 2%, but on a path sustainably to 2%. That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
And of course, all of this caution could spread a little bit to Asia as well. But we are seeing pretty early advances being signalled across major Asian markets today. That rally, of course, in the biggest tech stocks will be in focus for Japan and Korea in particular. We're seeing that broad rise when it comes to Sydney futures up by about 1% there. We are looking like government bonds in Australia seeing some small losses at the open today. The concern that inflation will remain sticky across major economies. We're also looking at some of those divergent trades between the Kiwi and Aussie assets as well, given the big move that we saw in the Kiwi dollar. Chicago Nikkei futures looking pretty muted. We had Japanese stocks climbing to a fresh record in terms of the equity gauges. Financials in particular shone yesterday. We're sort of weighing that Bank of Japan's next step after the biggest banks in Japan called on the BOK to make deep cuts to those monthly debt purchases. We're also watching, of course, China. The plenum is coming up, and at this point we're seeing sentiment pretty dire. We're seeing that deterioration again ahead of next week as we kind of see investors really losing patience with this idea that we could see a policy-driven turnaround. Let's bring in for some analysis Mike Goosay, who's a global fixed income CIO at Principal Asset Management. So there's a lot of cross currents at the moment from the inflation outlook, from what we're hearing from Fed Chair Powell, as well as some of the concerns that remain unabated over China. So how are you, I guess, looking at what a balanced portfolio looks like at this point?
Good morning, and thank you for having me in today. Certainly, we've seen a meaningful decline in the rate of inflation in the globe. The U.S., you pointed out earlier with your quote from Chairman Powell, has seen a material improvement. It hasn't been a straight shot lower, but certainly has seen that inflation rates are much lower than they were just a couple years ago. And as we think about the future based on that outlook, the employment picture continues to show some signs of weakness. The economy itself remains relatively healthy, but not certainly growing at the rate it did a few years back. And so at this point, we are looking at fixed income as being attractive. Traditionally, when you get a pause in Fed policy rates, you get the tailwind to duration, you get a push lower in yields, and fixed income has an attractive total return characteristic.
Are we likely to see more volatility going into the second half?
Well, I think there's a lot of uncertainty. Geopolitical uncertainty certainly continues to be a major issue for all markets, but fixed income included. Presidential election in the U.S., you have wars in Ukraine, you have a war still in the Middle East, which are all creating uncertainty. But you're also seeing economic volatility. The data hasn't been smooth. We've seen some of the reports be much stronger than expected and others be much weaker. So we'd expect that to continue. But the overall trend, as Chairman Powell said, is that inflation is steadily coming down. The economy, albeit still in a reasonable path, is much slower than it was. And we do think that affords the Fed the flexibility to begin to cut on rates as early as September.
Given the risks that you mentioned, how much do you really stay in cash or cash equivalents like money market funds?
So the reinvestment risk of money markets is real. As central banks cut rates and you see that overnight rate come down potentially meaningfully as we go through the next 12 months, you should expect that money market flows could be more negative and that they'll be chasing that duration, as I mentioned before, where you have positive expected returns and maybe a steeper curve that would drive investors to shift out the curve.
Is U.S. high yield, for example, a place that you could take a look at in this environment?
Well, I think that's a great question because as we sit here today, the economy remains okay. Earnings remain relatively stable. We've seen some improvement in the second quarter expected earnings. First quarter were great, and it's not just the Mag 7. It's broadening out in terms of earnings for the U.S. companies. And so as a result of that, despite the fact that high yield spreads remain relatively tight, the all-in yield remains attractive, and it's hard to imagine an environment where default risk rises materially. So we do think high yield offers attractive risk-reward opportunities today. Credit more broadly does as well. So as we've thought about things like short-dated securitized assets, some investment-grade credit names where there are some stories, but also where you've seen a meaningful improvement in the overall health of that sector. So we are, net positive on credit assets as well.
Michael, I wanted to get your views on Japan and JGBs. What's your view in terms of the magnitude of cuts that we could see from the BOJ?
Yeah, so it could be significant. I think the market is a bit nervous about that and its implications for long-term interest rates. As you know, the Bank of Japan has been the largest holder of JGBs, and as they reduce the market reduces dependence on the BOJ, some questions about who's going to step in, whether that's private pensions, public pensions, and so that reduction in JGB ownership by the Bank of Japan could have a meaningful effect on the market. We've already seen it in some ways that with 10-year JGBs above 1%. But as we kind of go forward, we do think that we're getting close to that balance now where you've had enough of a sell-off that may attract some domestic as well as potentially international investors.
Michael Goosay, good to have you with us, Global Fixed Income CIO at Principal Asset Management. And we turn to a top story because this is really a trial that's captivated Wall Street for the past 2 months. Archegos founder Bill Hwang has been found guilty of criminal charges stemming from his firm's multi-billion-dollar collapse, with a jury deliberating for just a day and a half.
Let's bring in Bloomberg's Vonnie Quinn, who joins us live from the federal court in Lower Manhattan. And Vonnie, give us the details first and foremost of what this conviction entails.
Hi, Heidi. Hi, Shery. Well, exactly. This is the downfall of Archegos Capital Management, which happened the week of March 22nd, 2021. But let me tell you what the charges were, because Hwang was found guilty of 10 out of 11 charges. Charged, of course, by Damian Williams, the Southern District of New York. You'll know him because his most recent victory was the Sam Bankman-Fried conviction. Well, he and his team said that Bill Hwang was essentially running a criminal operation. So the charges were racketeering conspiracy, which is breaking the RICO statute, the same as what mobsters get hit with. Also securities fraud and wire fraud, defrauding counterparty banks by lying to them about concentrated positions that Archegos held and the level of risk in its portfolio. And additionally, he was found guilty of 6 out of 7 counts of market manipulation as it pertained to several stocks, including Viacom, CBS, and also some China stocks listed in the United States, such as Tencent, for example. Prosecutors essentially said that Hwang was running a market manipulation scheme, artificially inflating prices by obsessively building trading capacity and getting more and more banks on board without telling them transparently who else he held these same positions with. And in the end, it all came crumbling down that week. The defense argues couldn't have been a pump and dump scheme because there was no dump. Hwang never sold a single share. Well, it turns out he didn't really get a chance to, did he? Because the week of March 22nd, Viacom announced a secondary share sale, which sent Viacom's share price down, detrimentally affecting the portfolio. And also, the SEC said it was looking more closely into China companies listed in the United States, also detrimentally impacting his portfolio. Well, that started off a cascade of margin calls across Wall Street. Panic ensued, and by Friday, Archegos, which at its peak had been worth about $36 billion on paper, was wiped out entirely. And collectively, banks across Wall Street were in hock to the tune of $10 billion.
Yeah, those banks like Credit Suisse, UBS, really taking a big hit, right? And really raising serious questions about how they're assessing these risks. Will the industry take any steps to ensure that a similar situation doesn't happen again?
It's very difficult, Shery. There have been calls from Congress people such as Senator Elizabeth Warren, for example, for more transparency. But essentially the way this was done, and it's done across the street to varying degrees, perhaps not as strongly as this, but you are allowed to make a swap agreement with a bank and you're allowed to make a swap agreement with another bank, and your name may never be out there. For family offices, if you own more than 5% of a company through these swap agreements, you don't have to make it public. Now, that's not the case for anybody else. So there are rules. If you own more than 5% of a company and you're a fund manager or you're an asset manager, then you have to say to everybody, I own more than 5% of this company. Family offices, well, they can get away with a little bit more. And in Hwang's case, he certainly tried to get away with a lot more.
Bloomberg's Bonnie Quinn there. Coming up on the Asia trade, Japan's retail sector is in focus. We speak to EY ahead of key earnings reports. We'll also be talking central banks and the Bank of Japan's bond buying plans with Lombard, Odier and the Japan Center for Economic Research.
A look at live pictures out of the White House as we're waiting for President Biden to host the NATO summit and welcome them to this arrival ceremony. This is Bloomberg.
It's up to the president to decide if he is going to run. We're all encouraging him to make that decision because time is running short. I want him to do whatever he decides to do, and that's the way it is. Whatever he decides, we go with.
Former U.S. House Speaker Nancy Pelosi speaking to MSNBC. Now, Pelosi's remarks really have dealt a fresh blow to President Biden's re-election bid. But another senior Democrat, Senate Majority Leader Chuck Schumer, has reiterated his support for Biden following a report he was open to replacing the 81-year-old as the party's candidate.
Yeah, let's bring our White House correspondent Josh Wingrove joining us for the latest. And Josh, as we were just saying earlier, this is a very fluid situation. In terms of survival, we've heard nothing but really defiance from the president. Are the odds sort of starting to look a bit limited against him?
Yeah, they had thought, I think maybe 48 hours ago, that they had a handle on this. just to back up. Some of the people that had expressed privately concerns, like Representative Jerry Nadler of New York, had said, Biden's not going anywhere, so it looks like he's our nominee. But the dam is sort of leaking, if not breaking again in the last little bit. Pelosi, her comments this morning just shook through Washington just remarkably. She sort of really sent a big signal, calling on him to make a decision that he insists he's already made. And then just moments ago, Senator Peter Welch, a Democratic senator, called on Biden to step aside. So we're up to about a dozen or so senators and House members combined. Now, that's a fraction of the over 200, nearly 300 that exist in Congress, but still it is a drumbeat right now. The president, meanwhile, doesn't seem swayed by this. Our reporting is that his letter on Monday, which said flatly, "I'm running, get on board. This infighting is hurting us." We're hearing that letter stands, that Biden is not swayed by this, but this is a pivotal moment. Tomorrow he has a big press conference. A lot of eyes will be on that. And you can say, I think fairly, that tomorrow is going to be one of the most pivotal days of Biden's presidency so far.
And Josh, why are we seeing the tides turning at this point? What's happened in the last couple of days that's making President Biden's candidacy even more challenging?
This is still flowing from the debate, and at the sort of nerves after the debate were calmed by the White House saying, hey, he had a bad night, he had a cold, and people kind of gave him the benefit of the doubt and thought he would be out there more, doing things to calm concerns. For some Democrats, at least the ones that are speaking out in concern, he hasn't done that. His interview with George Stephanopoulos was meant to put some fears to rest. It didn't for a lot of people. Now we're seeing probably reports of polling rolling in. People are starting to see what the impact of this is. And so the question for a lot of Democrats is, what's our number one priority? Loyalty to Joe Biden or beating Donald Trump? And so right now, again, it is a small number, but for them to break rank like this is completely unprecedented so far in Biden's presidency, where, of course, age concerns and speech concerns and that kind of thing have been swirling, for longer than a couple of weeks. But this is stemming from the debate. And what's made clear, I think, to a lot of Democrats is that it wasn't just the debate. And we had, of course, today as well, George Clooney, the actor who hosted a fundraiser with Biden a few weeks ago, come out and say that Biden shouldn't be the nominee, and that at that fundraiser, Biden was the same sort of guy that we saw on stage at the debate. In other words, it wasn't just the debate night, according to Clooney, who is one of the sort of highest profile celebrities and donors that backs the Democratic Party.
We've now seen, just now actually crossing the Bloomberg, the Vermont Democratic Senator Peter Welch calling for President Biden to withdraw from his re-election bid for the good of the country. I quote in this op-ed published in the Washington Post. He's the first Democratic senator to explicitly call for Biden to withdraw from the presidential race.
Yeah, I guess the key question then here, Josh, is what happens next in terms of if he does withdraw, who are the potential candidates from the Democratic Party?
If he does withdraw, there'll be a lot of people that think Vice President Harris should more or less be handed the nomination as to lead the party. And of course, right now what Democrats are calling for is for him to withdraw from the race, not quit as president. He would serve out his full term in this, although some Republicans are raising questions about whether that should be the case. Other Democrats want sort of a mini splash primary, either at the convention or beforehand. It's not really clear who that would be. So it's up in the air right now. This is game theory. Some people dismiss this as ridiculous. Michigan Governor Gretchen Whitmer called it fantasy football when asked about it this morning on TV here by MSNBC, saying people are trying to draw up these little, dream schemes on the back of a notepad that in reality won't, hit fruition. I think the next 24 or 48 hours are crucial for Biden. If he can consolidate into the weekend here and into next week, the calendar kind of helps him a bit because it'll be the RNC. Trump will be on stage. The news cycle will shift a bit. He's announced an interview on Monday with Lester Holt, and maybe that can tamp down some of the pressure. But if the next 48 hours go poorly, in particular, as I said, that press conference about 24 hours from now, then though you're likely, I think, to see at least some more Democrats step up and say Biden should not be our standard bearer in 2024's election.
White House correspondent Josh Wingrove there with, as we mentioned earlier, a very fluid situation. And, of course, the Vermont Democratic Senator Peter Welch there saying that the latest data makes it clear that the political peril to the Democrats is escalating. We cannot unsee President Biden's disastrous debate performance. And all of this is sort of playing into some of the other events that we're following, right? He's working really to reassure colleagues and voters that he's fit for office. But we're hearing from sources in terms of some of the meetings that are taking place at NATO that may also suggest that credibility is at stake here.
Yeah, not surprising given that a lot of people are now weighing the possibility that President Trump, the former president, will actually reclaim the Oval Office. Our East Asia government editor John Herskovitz joins us now with the latest. So publicly, these NATO leaders have praised President Biden's speech, but they seem to be hedging their bets.
Exactly. Biden delivered a really forceful speech in NATO, talking about the importance of the alliance and talking about the threats posed by authoritarian states like Russia. At the same time, Bloomberg's reported that some EU officials, some NATO officials are speaking with those tied to the Trump presidency, some leading Republican lawmakers, trying to find out what's in store. And it's no secret that Trump has shown his disdain for NATO. He's threatened to withdraw for it. And he's also shown his admiration for Putin, raising concerns that a quick deal he seeks could really benefit Russia and be to the detriment of all the members of NATO who have put so much effort into supporting Ukraine during the conflict with Russia.
What are the implications for Ukraine then?
It's really, I mean, this is, with all of these meetings, it's always make or break. It's life or death for the country. This is an existential war. We have Russian invasion. President Zelensky is there seeking help. NATO's pledged at the beginning of this air defense systems. We're getting another pledge, several NATO members, of long-term military support for Ukraine that will run for several years. And so the push is there. The main thing that Ukraine has wanted has been an invitation to join NATO, which doesn't seem to be coming from this meeting.
John Herskovitz, our East Asia government editor. So also, we continue to keep an eye on sources telling us that NATO leaders are set to issue the alliance's strongest ever language, calling out China's support of Russia's war in Ukraine. This is Bloomberg. And the latest from the corporate front, and Bloomberg has learned that PwC is cutting jobs across its China operations after an exodus of corporate clients. Sources say at least 100 staff in Beijing, Shanghai, and other locations are being let go. Bloomberg reported last week that staff concerned about regulatory crackdowns and client exits were looking for opportunities elsewhere.
Well, HSBC is revamping parts of its investment bank in a move that will make it look more like rivals such as Citigroup. According to an internal memo seen by Bloomberg, executives in the global banking business will shift existing sector teams into 5 larger groups. It also says the move will allow bankers to work more efficiently and with better focus. Much more ahead on the Asia Trade. This is Bloomberg.
We are getting the latest comments from Fed Governor Lisa Cook, speaking in Australia as well, that she expects more disinflation without much rise in the unemployment rate, and that the U.S. data so far seems consistent with a soft landing. What are the expectations from the markets right now when it comes to a Fed pivot, and what is the sort of confidence that policymakers need to see at this point?
Well, at the moment, the market listens to all that from the Fed and says, we're confident they're going to cut in September, which is only 2 meetings away. So, the market's got a pretty short fuse on this. The Fed seems to have a somewhat longer fuse. And the key in many ways does look to be the jobs market. Assuming that CPI that later on today doesn't completely upset any apple carts. We've got a picture of gradual, slow disinflation and gradual, slow loosening in the labour market. Now, if either of those change, if we were to get significantly weaker inflation, or I think more importantly, if the jobs market was to start to show serious signs that large numbers of people are starting to lose their jobs, in that case, the pivot to a cut would be much, much faster. Powell himself alluded to that in the testimony, that they are mindful of the job risks. The soft landing at the moment is moving a little bit more towards guarding against a labour market slump. And if they get signs of a labour market slump, even where inflation is now, they might well go. However, all around the world just about, the jobs situation is looking reasonably good, especially on a historical basis. So, it's a risk that central banks have often run, of waiting until it's too late on the jobs front. They're aware of that risk, but they're still not seeing it as anything imminent. That's why they're so cautious about cutting rates.
Garfield Reynolds, who leads our Markets Live coverage in Asia, joining us with the latest on monetary policy. Of course, we are watching that caution coming from the Bank of Japan as well, but the other way around, where they're really trying to mull when that first rate hike should come. But ahead of that, we do have a couple of big earnings reports. 7 & I Holdings may be giving an update on its business strategy that's amid efforts to focus on convenience stores and shed less profitable businesses. The company is under pressure from some activist investors to improve shareholder value.
We're also watching Shery, Japan's biggest apparel business, fast retailing, of course, of Uniqlo. Also reporting later, analysts expecting a strong performance in overseas markets. Macquarie notes that the company's long-term success hinges on Uniqlo's international units, as more than half of that revenue now comes from overseas.
Let's get more insight on Japan's retail market and consumer outlook with our next guest, Nobuko Kobayashi. She's Asia-Pacific Strategy Execution Leader at EY. Nobuko, great to have you in the studio with us.
Happy to be here.
So what are you expecting from this earnings season from the big retailers?
Right. Well, the big retailers' earnings really hinges upon the domestic retail market as well as international. And then domestic-wise, we're in a fragile state. Actually, the consumer spending shrank by 2% in May, and this is following the long-term trend of 13 months of declining growth rate.
But does that mean that the weak yen, for example, which is really wreaking havoc on the domestic economy right now and those household spending, does that mean that exports, though, become cheaper and they can benefit from that?
Right, but exports is less and less important for Japanese retailers because they export less, but they procure and supply overseas in the local markets. So the balance of the domestic market and overseas market is very important. And for big names, of course, the growth potential is more in the overseas market.
Right, and if the supply and procurement is taking place offshore as well, then perhaps that currency positivity is limited. Are you seeing a big boost from tourism, from visitor numbers?
Yes, that has been a bright spot for Japan post-pandemic as it opened its doors to visitors. So we're still seeing record high numbers of visitors. May saw the number of inbound tourists to be as high as 60% year over year. This is still high, but compared to the beginning of the year when the growth rate was 90% or so, it's tapering down a little bit.
Where do you see the strength in terms of the companies that you're watching and perhaps some of the more vulnerable names?
I can't name the names, but I think the companies that are doing strong is the companies who can increase the price without dropping the appetite in consumption. And this is thanks to their brand equity and then their ability to optimize the price. This is something the Japanese... Well, luxury is an interesting place. Yeah. Luxury is doing very well against the backdrop of weak retail scene in Japan. This is buoyed by the stock market, all-time high. People are feeling confident. But this is the sliver of the segment who can afford the luxury market.
How able are these retailers to increase prices domestically? Because Japan is a place that hasn't seen any price increases for decades, right?
Right. So this is an interesting question, and pricing strategy has not been the forte of Japanese companies in general because they're not used to it. But the companies who can increase the price and optimize a profit without dropping too much of the quantity they sell are the companies who are used to overseas markets and who has the functionality inside.
Are you seeing any changes in the Japanese consumer and how willing they are to accept those price increases? And what do they like these days?
I think people are getting used to price increase after decades of deflation. So we do see a consumer sentiment changing a little bit. But at the same time, because the real wage growth has not been positive over 2 years, people are very cautious and kind of tightening the purse strings.
Yeah, in the U.S., you would expect those discount retailers to do well when the households are not doing well. Is that the case here, too?
Right. So we see a polarization. On one hand, the luxury market is doing exceptionally well in Japan, even compared to Western markets. But on the other hand, the downtrending shift is happening.
Yeah, price elasticity, when you're taking part in this sort of big, demographic and structural shift in the economy is really quite interesting, isn't it?
Yes, yes. So the pricing in Japan is something to watch as we exit the long tunnel of deflation. Yeah. And the companies who do well in pricing, who have the power to price, will do better than others.
Did you go into the details of, say, the consumer demographics? How do young people spend as opposed to the older generation?
The younger generation seem to spend more on experiences, and that they also spend more on what they like rather than what they're told to like. So I think the Gen Z trend is somewhat universal in that way, and they're more influenced by social media. They tune into their favorite influencers, so it's more fragmented than before.
You mentioned wages and how they haven't really meaningfully translated to a boost in confidence in spending. But do you see some of these companies feeling just an additional pressure point with rising wages? And at the same time, do you see some resilience? I know luxury, again, is one of them where you could potentially still see positive returns despite higher wages.
Right. I think the luxury and wages are not straightforward correlation because the luxury market is usually caters to the high net worth individuals.
Oh, I mean wages in terms of companies paying wages. Yeah.
So there is a pressure by the government and sort of the overall sentiment to raise wage. So we may see an uptick in the nominal wage growth from July because as a result of springtime negotiation, a lot of companies actually committed to raising the wage.
So in terms of which companies would be feeling more pressure on their bottom line from those rising wages, do you see segments performing better than others?
I think the companies that can afford the wage increase are the companies who are doing well. For instance, in semiconductor, we see a boost and some high-tech industry as well. Usually in the labor-intensive sectors such as retail, it's harder, but there is the momentum to raise a wage even for like part-time workers.
Nobuko, always great to chat with you. Nobuko Kobayashi, who's the Asia Pacific Strategy Execution Leader at EY. More ahead on the Asia Trade. This is Bloomberg.
We take you to live pictures of the White House where President Biden is now welcoming leaders from around the world for the NATO summit. You can see there the South Korean president shaking hands with the Ukrainian President Zelensky there. We know that Jens Stoltenberg, the head of NATO, is also present. We are looking at the delegations that have arrived at the White House. President Zelensky, of course, is there at the center with President Biden, and you can see the Secretary General of NATO standing besides him, as well as President Emmanuel Macron. A lot of the agenda for these leaders, Haidi, especially given that they need to really shore up support for Ukraine.
Yeah, Ukraine obviously will be a big one, particularly as we head towards the November election, and who's going to be in the White House following that is going to be really key in terms of this sort of existential question for NATO, and certainly an existential question for Ukraine in this war, right? And very interestingly, we're also hearing there's some concern, despite President Biden's efforts to reassure NATO leaders about his fitness for office with that very strong speech at the opening of that anniversary summit. But there are still some doubts and some sort of reaching out to those with links to Donald Trump at this event. So a lot going on. And of course, we're also watching what they'll do, what they'll say with regard to China.
Yeah, I find it really interesting that we're focusing on President Yoon Suk-yeol of South Korea alongside President Zelensky right there because, of course, South Korea very influential in the fact that they have millions of artillery shells that are needed by Ukraine.
Yeah, that's going to be really interesting there as well. We're also watching in terms of Bloomberg citing this draft communique that's set to issue NATO's strongest ever language, calling out China's military support for Russia. This is according to people familiar with the matter. There are signs that Beijing is developing an attack drone for the conflict with Ukraine. We're hearing in the language they'll be describing China as a decisive enabler of Russia's war against Ukraine.
Right, we'll leave it there, but of course you can continue watching that on Live Go. Let's turn to some corporate news at the moment. Apple suppliers may move at the opens in Tokyo and Seoul. We're told the tech giant aims to ship at least 90 million iPhones in the latter part of the year.
Tech reporter Annabelle Drillers joins us now for more with this Bloomberg scoop. And Belle, it does seem like Apple is counting on these new AI features to boost interest and demand.
Yeah, that's right, Heidi. Shery, Apple, we know, had a pretty slow start when it came to AI, but then last month it introduced this new so-called Apple Intelligence. It's going to help users, for instance, summarize text, create images, a lot more. I won't get into more details of that, but suffice to say, as you say, Apple is really banking that these features are going to create a lot more demand for its products. So as you said, we're hearing to the tune of 90 million devices or iPhones being shipped in the latter part of this year. That, sources tell us, is about a 10% increase on earlier models. So it's certainly underscoring a real confidence in these AI capabilities, especially when you think about Apple itself has seen some pretty anemic sales growth over the last couple of years. Although that weakness, of course, is also helping to create a more favorable base effect for comparison with last year in particular, because that was when China wasn't doing very well Apple wasn't doing very well in China in particular.
Well, Apple isn't the only one betting on AI, right? What did Samsung unveil at its Galaxy Unpacked event?
Yeah, lots of bells and whistles came out in Paris overnight for that event. And certainly, as you said, that boost that AI tools are going to help boost sales. That came out. But lots of new devices. The focus in particular, you're looking at those foldable phones. That's where we had a lot of the different intrigue and different features being discussed. The Galaxy Z Flip and the Galaxy Z Fold. Both of those have, as I said, lots of different tools or applications, but one that stood out in particular, very interesting, is a new automatic interpreter. So essentially, Samsung's saying it's going to help its users or people that use its iPhones converse in different languages, and it's going to be integrated with apps like WeChat, WhatsApp as well. So that's pretty incredible technology, but Samsung faces very stiff competition on this foldables front, especially from the Chinese market, really trying to break in on the mainland. We've seen Samsung then cooperating a bit more with local tech names like Baidu, for instance. It's integrated Baidu tools into its latest Galaxy S24 phone earlier this year. It's saying that those sorts of partnerships are likely to continue. Samsung right now has just a very small slice of the pie for sales in China.
Tech reporter Annabelle Joel is there in Hong Kong. We have more ahead on the Asia trade. This is Bloomberg. The Chinese EV maker Leapmotor may be less well known than its competitors, but it's counting on a potentially transformational deal with Stellantis to give it a global foothold. Our Chief North Asia correspondent Stephen Engel got an exclusive look at Leapmotor's facilities and spoke with the founder, Jiangming.
Chinese EV upstart Leapmotor is pretty upbeat, despite not even cracking the top 10 in domestic EV sales this year through May. Sales picked up in June, but so have industry headwinds, from prolonged weak demand and a bruising price war to trade barriers going up overseas. So how does Leapmotor, dare I say, make the leap?
Leapmotor likes to think of its DNA as being rooted in electronics. In fact, 60% of all the components in these cars are made in-house, including all of the electronics except for the individual battery cells. In fact, the head of the motor and gearbox division is a software engineer.
Leapmotor founder Zhu Jiangming is confident their electrical expertise will eventually set the 9-year-old but still unprofitable Leapmotor apart while also driving down costs.
The change in China will happen very fast, maybe even about 3 years. The market of battery electric vehicles plus hybrid models will account for 90% of the total sales. It widens the gap between China and the world in the transition to EVs.
Leapmotor's flagship EV is the C10 SUV, packed with advanced driver assistance technology and a starting price of about $19,000, one-third cheaper than the basic Tesla Model Y in China. Trade partners like the U.S. and Europe say industrial overcapacity, state subsidies, and in some cases, ties to the Chinese government give Chinese EV makers unfair trade advantages. Zhu, by the way, also founded Chinese surveillance camera maker Dahua Technology, which is sanctioned by the U.S. for its alleged ties to China's state security apparatus. Zhu is adamant that Leapmotor and Dahua are separate entities. Nevertheless, 1 in 5 of all vehicles made in China were for export in the first quarter, a trend that's rising.
We indeed have received government support, but our contribution to local tax revenue is little, as we have not yet made a profit. Our sales are also limited. It's not like what the West has imagined.
The risk is that jobs, industries in our home countries, the United States, Germany, France, Japan even, start to melt away as this juggernaut called China just overwhelms markets because it's lower cost, higher quality, and more efficient. That's where we are, and it has boardrooms worldwide really nervous about the potential for this outcome from China.
And that's where Stellantis comes in. The Chrysler and Fiat owner in October signed a $1.6 billion partnership deal for a 21% stake in Leapmotor. Stellantis gets access to Leapmotor's EV tech and cost controls, while Leapmotor gets, well, a production entry point into Europe.
All right, this is the subcompact hatchback T03 from Leapmotor, and this will be the first model that will roll off with the partner Stellantis. So many Europeans might have their first exposure to Leapmotor with this little guide for a $7,000 car.
That's the entry price in China. European pricing is not yet set.
Indeed. If the EU or other places in the world raise tariffs on EVs and impose more restrictive measures, it may have an impact on the globalization of Chinese EVs.
And yet, Zhu says they'll open showrooms and start sales in at least 9 European countries and 3 other regions by the end of the year, allowing Leapmotor to perhaps avoid some of the obstacles other Chinese EV makers may face. Stephen Engel, Bloomberg News, Hangzhou, China.
And we get you to breaking news out of Japan. We are getting the core machine orders year-on-year, a jump of 10.8% for the month of May, beating expectations and also an acceleration from the previous month. But the month-on-month order, though, is a contraction for a second month, down 3.2%. Month-on-month for the month of May, really decelerating even further from the previous month, Heidi.
Yeah, and of course we're watching to see how those market opens react. We are getting stocks coming online in just under 5 minutes or so. We are seeing some nice gains across the board, given that we continue to follow the rally that we see on overnight, particularly in the tech sector. So watching Japan and Korea markets most closely today, particularly when it comes to Samsung. The market opens are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After another fresh high on Wall Street, we're talking about the S&P 500 surpassing that 5,600 level. Chair Powell sticking to the script when it comes to his congressional hearing, wanting to rein in inflation. But of course, in the Asian session, another one we're watching is the Bank of Korea.
We are, in fact, despite inflation falling pretty below thresholds in the Bank of Korea for the Korean economy, I should say, there are no expectations of a pivot in policy just yet. So I guess it really underscores just a degree of caution that we're seeing from major central bankers on not wanting to make that policy misstep at this point in the cycle.
Yeah, we saw the RBNZ also holding steady this week. We continue to watch the repercussions throughout the markets as we are also watching for the bond markets, with treasuries remaining fairly stable despite those comments coming not only from the Fed chair but also Fed Governor Lisa Cook talking about wanting more disinflation. But take a look at the open in Japan. The Nikkei gaining more than 1% alongside the topics. Of course, in Japan, we are watching JGB yields as well because we just had the Bank of Japan's meeting with market participants when it comes to the reduction of those debt purchases. We have seen core machine orders really jumping more than 10% year on year. But we're watching the trade in South Korea because game maker Shift Up is jumping in its Seoul trading debut, up more than 30%. Remember, this is a game developer, the second largest IPO this year. The IPO price was at the top of the marketing range. We'll see if this really jump continues throughout the year because we saw a lot of positivity about these game developers from South Korea, including Krafton, Kakao Games, but they've now seen double-digit losses since their IPOs a few years back. But as I said, it's about the Bank of Korea. We're watching the Korean won in today's session as well after it dropped to a one-week low against the U.S. dollar. We're also watching Samsung because it's very close to record highs, and we have seen, of course, the largest labor union declaring an indefinite strike. In the meantime, we're getting those South Korea July export numbers for the first 10 days of the month, a jump of 33.8% year on year. Imports gaining 26.7% year on year. And really, it is this solid backdrop when it comes to the trade situation across South Korea that's helping not only Samsung, but also perhaps giving the BOK a little bit more confidence when it comes to the broader economy, Heidi.
Yeah, confidence and conviction is what these central bankers are looking for at the moment, right? And nobody is really quite willing to stick their necks out just yet. But take a look at how we're faring when it comes to the start of trading here in Australia. Just that staggered open coming online now. Looking like we're setting up for a pretty positive session here. We are just within about 1% when it comes to a new record for Australian equities. That top was back in late March. 78.96 is a level on a closing basis that we're watching today. The Aussie dollar is holding with a little bit of gain, 67.54. Of course, when it comes to the greenback, really kind of waiting to see what we get out of those CPI numbers as well. And watching treasuries as well was a pretty strong $39 billion auction of 10-year bonds there. Swaps still pricing in 2 Fed cuts in 2024. Higher chances now of the first one coming through in September. But if you listen to day 2 of Fed Chair Powell's testimony, he's still not willing to sound overconfident when it comes to the fight against inflation. Take a listen.
We want to be more confident that inflation is moving on a path sustainably down to 2%, not at 2%, but on a path sustainably to 2%. That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Let's bring our next guest, who's maintaining his portfolio at strategic weights, waiting for event catalysts for the second half of the year. Let's bring in Homin Lee, who's a senior macro strategist at Lombard Odier. Homin, always great to have you with us, and certainly no shortage of event catalysts being set up in the second half of the year. What's going to be kind of game-changing for you?
Well, obviously, the largest catalyst will be the U.S. election in November, which will have significant implications for inflation and policy trajectory in the U.S. So for that reason, despite the fairly constructive macroeconomic backdrop and the prospect of rate cuts happening in the U.S. and even U.K. And some Asian markets, we still prefer to have our portfolio at strategic weights, which means we're not accentuating risk aggressively at the asset allocation level. That doesn't mean that we're overly cautious. We are simply keeping the portfolio well deployed in a diversified manner. But we think the right stance to make at this juncture is to wait for this catalyst to materialize and potentially exploit those market movements in reaction. And again, the U.S. election will be the key catalyst in that regard.
And I suppose that would be the question as to whether the story of US exceptionalism for equity markets and the dollar will continue, right? In the meantime, are you seeing any kind of interesting shifts to Asia? I know that you're quite constructive on Korea.
So the cyclical picture at the global level is changing in our view. If you look at the business survey indicators, especially the PMI for the manufacturing sector and the export performance of some of the key exporters in the region in Asia, they're turning up. So, while the productivity story in the U.S. getting a bit of challenge in the first quarter, even though it might rebound a bit from the first quarter setbacks. In our view, there is a hint of broadening of global growth to the economies outside the U.S., and we have seen some growth upgrade, not just for some Asian exporters, but even some European economies. So that's a sign that potentially lagging markets could start catching up in the second half of the year, especially with the policy backdrop improving rather substantially with the rate cuts and et cetera. So in our view, that makes some of the other markets quite interesting. So in Europe, we like UK now. And similarly, a cheap market in Asia is South Korea. That has not performed as well as the other North Asian markets. But now we see some scope for these markets to actually catch up a little better in the second half of the year.
How concerned are you about the Bank of Korea's monetary policy direction? Because we're not necessarily expecting anything now, but if those rate cuts get delayed, that would weigh on the economy. But at the same time, rate cuts mean potentially more pressure for the Korean won.
Well, the interesting situation here is that, first of all, it really depends on what your conviction is for the U.S. rate cuts and the dollar trajectory. Yes, we still have a positive view on the dollar, especially against the other reserve currencies. But for the emerging market currency complex, we're more neutral. And South Korean won has been very weak, potentially due to linkage to the yen. So in the second half of the year, the dollar picture could actually stabilize a bit for the won in particular, given its underperformance so far. And the macro picture is pretty decent, with the inflation getting closer to the BOK target. So the FX market pressures on the BOK to refrain from rate cuts, in our view, will start ebbing in the second half of the year. And that opens the door for, in our view, 2 rate cuts starting in August. Inflation is behaving the right way. The bank is worried about financial stability, especially for the savings banks and real estate. So these combinations should prove relatively positive for the equity markets there, and maybe not as negative for the won.
When it comes to diversification, do you include China? What are you expecting to see from the third plenum?
What our expectation for the third plenum is that there will definitely be a focus on overhauling the consumption tax framework and some gestures for the real estate market, because that's still important for the domestic consumers for whom real estate is the most important asset class. And we have to be mindful that some of the home buyers might be still underwater, and they're facing the prospect of even more declines in the house prices, especially for the less populous cities. So, if the leadership makes these gestures in the plenum, that will definitely be positive at the margin. But at the same time, keep in mind that the consumption tax overhaul, especially if it leads to greater revenue for the government, it's negative for domestic consumption. And it also highlights the fact that government is worried about fiscal affairs at the local government. That suggests that the leadership is still reluctant to use fiscal bazooka to change the cyclical situation there. So despite the scope for some positive catalysts coming out of the third plenum, we prefer to keep our positioning on Chinese market at a neutral level. That might be kind of the right way to balance these challenges that have not been resolved and some potential positive catalysts.
Homin Lee, Senior Macro Strategist at Lombard Odier. Always great to have you with us, especially on Bank of Korea Day. Take a look at one of those stocks that we're watching in the Korean session, and it's the debut of Shift Up. This is a South Korean developer, one of the largest IPOs in recent years, and certainly the largest in South Korea for a gaming company in almost 3 years. It's starting with a bang, up more than 36%. Of course, a key question is whether these levels can be sustained. Our tech reporter, Annabelle Drew, joins us now. And Belle, we have seen other game developers, Kraft and Kakao Games, not doing that great after that initial jump from the IPO. What are we expecting from Shift Up?
Yeah, that's right. And actually, I was just taking a look at how Krafton has performed, for instance, since its debut back in 2021, and it's around 50% lower from the high that it reached in November of that year. So yes, if you take a look at history, it's perhaps not a great indicator of where Krafton, or Shift Up rather, goes from here. That said, this is an IPO that was heavily subscribed by institutional investors, around 230 times by funds, according to filings that we got last week. And as you said, an important IPO that we're seeing, or listing that we've got in Korea this year, the second biggest that we've had for 2024. A bit of a background on this company for people that aren't familiar with it so much, but it is a game maker. It has mobile and computer games. Console game, that the one that is well known is Stellar Blade, and that one, set in a post-apocalyptic world, it's one of the biggest sellers that we've seen on topping sales on PlayStation stores in 8 countries since it was rolled out early this year. So yes, you're seeing a bit of footage here. Certainly something that is very popular amongst the gaming community. How the company is planning to use its IPO proceeds, it's really about trying to further diversify its game portfolios. That's, again, according to the terms of the deal. But a big trading debut that we're watching in the session today, and certainly a big surge at the open.
We're also watching Samsung we've been watching Samsung very closely all week, right? But there's so many cross currents at the moment for this company.
Yeah, that's right. I mean, you've got what's going on with the strike, and we were hearing yesterday that it was an indefinite strike. We're also, of course, just getting the reaction, perhaps not so much in the market so far, but still the reaction to the big Galaxy Unboxed event overnight, or Unpacked rather. What this is was, well, essentially we got a lot of new devices being rolled out, but the focus was very much on the foldable section in particular. There are 2 different devices that we're focusing in on here. Both of these really infused with a lot of AI technology. Lots of different tools. As I said, one of the ones that really stands out is an interpreter tool. So essentially, Samsung's saying it's going to be able to help people converse in different languages by putting AI technology into features like WeChat, like WhatsApp. So very incredible technology. How this really lands, well, that foldable segment in particular, the Galaxy Z Flip, the Galaxy Z Fold, it's really about trying to sell into the Chinese market, where Samsung has a very small slice of the pie. So far, they haven't really been able to make much of a dent, but we have seen them being willing to sort of cooperate a little bit more with local companies there. Baidu, for instance, is one that comes to mind.
We're also watching Samsung as an Apple supplier, right? Because Bloomberg has learned that Apple could be shipping more of its devices later this year.
Yeah, that's right. Samsung is one of the biggest suppliers to Apple, and certainly we've got Apple suppliers in focus across the course of the day, because we had a Bloomberg scoop out earlier talking about the demand or shipments that we could see in the second part of the year. So what we're hearing from sources is that Apple is looking to sell or ship 90 million devices. That would be around a 10% jump on earlier models. Certainly underpins, again, this demand that we could see for its own AI features, because last month Apple rolled out the Apple Intelligence platform, and it's aiming to really integrate artificial intelligence technology into all of its lineup. But that Apple iPhone very much in focus, especially when you consider it has seen pretty anemic sales growth over the past couple of years.
Module is there in Hong Kong. And of course, we are watching the Asian chip makers given the big rally again in tech and sort of AI-related names that drove the Wall Street session. Taking a look, we've just been talking at length about Samsung, and a lot of those sort of downside factors doesn't seem to really be at play here. We're seeing some gains right out of the starting gate, and we're seeing some pretty strong numbers there for LG Display as well. More ahead on the Asia trade. This is Bloomberg.
As global leaders gather in Washington for the NATO summit, South Korea is in the spotlight. The U.S. and Ukraine are seeking Korean weapons to help fight off Russia's invasion. East Asia government editor John Herskovits joins us now with the latest. And John, it was really interesting to see the carefully choreographed opening ceremony at the White House, how they had placed President Yoon Suk-yeol right next to President Zelensky.
Yeah, and President Zelensky, from the start of the full-scale invasion, has been seeking South Korea's help because South Korea has what Ukraine needs, and that's artillery shells. South Korea has some of the biggest stores in the world, and they're interoperable with the NATO systems that Ukraine's using. But South Korea has held off. They have a policy of not sending lethal aid to countries at war. And they've been worried about what Russia may do in response if they actually started to arm Ukraine.
So what was the catalyst for the change?
It was the meeting last month in North Korea with Putin visiting Kim Jong-un and signing this mutual defense pact. This just alarmed South Korea. It alarmed the U.S. and its allies. And after this, Yoon's government said it's time to reconsider whether we should arm Ukraine. And if the change is made, it could really alter the battlefield. We have more weapons from the U.S. and Europe heading to Ukraine. There's been talk of the stalemate, and South Korea could provide a lot of what is needed for Ukraine, and it has it on hand.
China's relationship with Russia also in the spotlight during this summit.
Exactly. We're going to for the communique, we're going to see language saying that the NATO is concerned about China enabling Russia's war, providing materials, components, equipment that's helping Russia fight in Ukraine. And this is, I think, some of the strongest language that's come out of NATO directed towards China. And China is always in the background of these meetings, but with this communique, it's making it to the forefront.
It's very strong language in that communique. Our East Asia government editor John Herskovits there with the latest on what we're expecting from the NATO summit. Well, China's market regulator is tightening rules on short selling and high-frequency trading to crack down on what it calls improper arbitrage. Our China correspondent, Min Min Lo, joins us now from Hong Kong with more. And Min Min, so what are the implications of these new regulations and guidelines?
Yeah, so the CSRC is cracking down on a number of areas. So short selling is one of them. They're now approving stock exchanges to increase the margin requirements for short selling. So investors are now required to put down 100% of the value of the securities that they're trying to buy, up from the current 80%. And private funds participating in short selling, in stock lending rather as well, they will have to increase their margins to 120%, up from the current 100%. And in the meantime, China's largest stock lending provider will also suspend stock lending business starting from July 11th. Now, analysts say that these moves will help lift market sentiment. China has had a history of stepping in to limit short selling during times of market volatility to avert this downward spiral in the stock market. And it looks like this is one of those times that they're stepping in after already taking quite a number of forceful steps in previous months to stabilize the stock market. Now, another area they're looking into is programmed trading. So the CSRC says it is now guiding stock exchanges to implement monitoring standards, as well as to delineate the red line for abnormal trades. And additionally, they're looking at considering charges for additional traffic on high-frequency trades. And they're also looking to work with their counterpart in Hong Kong to see how investors can report their programmed trades via the northbound stock links. So analysts say this move could perhaps reduce the scale of those long-short strategies that investors take and also reduce excess returns as well.
And we're just days away from the third plenum. Markets don't seem too excited.
Yes, there's not a lot of optimism just days ahead of that meeting. There's just not a lot of hope that the government will pull out the kind of big guns and stimulus of the sort that markets are looking for. So if you look at trading activity, that's down to lows that we have seen in previous market routes. If you look at the trading volume for Shanghai and Shenzhen, turnover is down to what we've seen in September and December of 2022, just before and after the 20th Party Congress. If you recall, September 2022 was when China was still deep in the throes of COVID. It was just a couple of months months before that white paper protest. And December 2022 was when China had rolled back those curbs, leading to a huge surge in infections that kept traders at home. Now, another indicator is that market breadth is very poor as well. If you look at the Shanghai Comp, just over 10% of its members are trading above the 50-day moving average. And if you look at the CSI 300, over a quarter of them have hit oversold levels. And foreign investors as well have been selling out every single session in June except for 3. If this trend continues, we'll see another month of net withdrawal and possibly flip that year-to-date gains and inflows to negative.
And of course, the housing crisis and any sort of policy action is front and centre. And there is a school of thought that they could do more, a lot more, QE sort of levels of more, but they're not likely to be able to go to such extreme measures.
Yes, so our Bloomberg economics team look at 3 different scenarios of how much money PBOC could print to inject into the market, because the current relending facility injecting 300 billion yuan into the economy to buy back those unsold homes is estimated to only help purchase less than 1% of unsold inventory. So if we look at what the Fed had done back in 2008 after the global financial crisis, if PBOC follows in their footsteps and inject about 24 trillion yuan to buy back homes, that could help mop up 70% of housing stock. If they follow what the ECB did after the European debt crisis, injecting 14 trillion yuan to their balance sheet, that could help mop up 40% of housing stock. But of course, quantitative easing of this scale would come at tremendous cost. It could cause inflation, devaluation of the yuan, and reduce policy space for future moves as well. So what they are more likely to do is inject about 3.6 billion yuan to conduct a repeat of that shantytown redevelopment program we saw in 2015, and that could mop up about 10% of housing stock and possibly boost GDP by 0.2% growth this year.
Our China correspondent Min Min, though, there. Well, the Biden administration will apply new tariffs to steel and aluminium shipments diverted through Mexico. This is in a bid to prevent China from getting around existing levies. The White House is looking to head off what it fears could be a flood of steel and aluminium products from oversupply in China. More ahead on the Asia trade. This is Bloomberg. Archegos founder Bill Hwang has been found guilty of criminal charges stemming from his firm's multi-billion-dollar collapse. Bloomberg's Vonnie Quinn has more from the federal court in Manhattan.
Tiger Cub Bill Hwang, founder of Archegos Capital Management, found guilty of a raft of criminal charges in Manhattan today. These pertain to racketeering conspiracy, 2 counts of securities fraud, wire fraud, and several counts of market manipulation in particular stocks such as Viacom, CBS, Discovery, and Tencent. U.S. Attorney Damian Williams in the Southern District of New York said that Hwang intentionally lied to Wall Street banks to try and up the trading capacity of the firm in order to intentionally move the prices of stocks in the portfolio higher, and that this doom loop just continued and continued. The defense, for its part, said it couldn't have been a pump and dump scheme because Hwang never sold a single share. There was no dump. The defense also saying that the wipeout was due to a black swan event, or indeed a week where there was a perfect storm. Now that week came March 22nd of 2021. It was a week where Viacom issued more shares, and the SEC said it was cracking down on some China companies listed in the United States. 2 events very detrimental to Archegos' portfolio. Within hours, margin calls started coming in from various banks, and by Friday, Archegos was no more, and collectively, banks across the street were down $10 billion. Sentencing, which in theory could be up to 200 years, at least for Hwang, but is obviously likely to be a fraction of that, is set for October 28th. Both Hwang and Halligan are likely to appeal. Vonnie Quinn, Bloomberg News.
About 30 minutes into trading in Asia, the top stories you should know. Advisors to President Biden are set to meet with Senate Democrats as more party voices question his re-election bid. Nancy Pelosi says Biden needs to make a quick decision, while major fundraiser George Clooney says he should bow out. Senate Majority Leader Chuck Schumer has told Bloomberg, quote, "I'm for Joe," after Axios reported he was open to replacing Biden as the candidate.
Archegos Capital founder Bill Hwang has been found guilty of criminal charges stemming from his firm's 2021 collapse. Hwang and former CFO Patrick Halligan will be sentenced in October for defrauding Archegos counterparties, including Credit Suisse and UBS.
And Asian stocks tracking Wall Street's rally after the S&P 500 and Nasdaq 100 hit fresh highs. That comes ahead of a key inflation print in the U.S. that could bolster the case for a Fed rate cut in September.
Take a look at how we're faring just about half an hour into the start of trading across major markets here in Asia this Thursday. And we're following that lead. Of course, yet another high on Wall Street. A lot of those tech names dominating. We are seeing that rally across semiconductors and those AI tech-related names here in Asia as well. The Nikkei 225 up by just about 1.1%, extending that record high that we closed at. And of course, this despite some concerns over the resilience of this rally and where this next leg of real returns for investors is going to come from. We're also seeing quite a bit of exuberance there for the Kospi, watching Samsung shares with the new product lineup, but also, of course, watching to see if we have any impact on those now indefinite strikes that were clarified yesterday. 0.7% higher for Korean equities on Bank of Korea decision day. We're not expecting that move despite inflation coming down towards the right direction. Australia, we're just about 1% on a closing basis from a fresh record high. We're watching those levels that were last hit in late March to see if we do that on a closing basis, Shery.
Here in Japan, we continue to watch the bond space. Of course, we saw JGB yields rising in the previous session, with investors continuing to assess the Bank of Japan's meetings with market participants and what that would look like in terms of reductions of debt purchases. We, of course, are headed to the July rate decision from the BOK, and although expectations are high for that rate hike to come as early as the July meeting, it's the debt purchase question that's really lingering in investors' minds, as we didn't get any clarity from the previous decision. Now, the Bank of Japan is deciding on those debt purchases, hearing from not only institutional investors, but also mega banks and regional banks. We've heard from all of these market participants with very much diverging opinions. Let's get more with Ikuko Samikawa, Director of Financial Research at the Japan Center for Economic Research. Ikuko, it's really great to have you here in the studio.
Thank you for having me here.
I'm really having a hard time trying to figure out what the consensus is when it comes to those debt purchases. Everybody seems to have different minds and ideas of how these reductions would happen. How much more challenging does this make for a decision to come from the BOJ?
Yeah, well, first of all, as you said, at the monetary meeting held last month, the BOJ decided to reduce its JGB purchases from the current level of 6 trillion yen per month. And at this meeting, from the current the meeting, the end of the month, the bank will decide on the detailed plan for reducing its purchases over the next 1 to 2 years. But before that, the BOJ said it would collect views from market participants. And Tuesday and Wednesday this week, the BOJ had the two-day meeting of...
yeah, so does that make the situation a bit more difficult when it comes to the BOJ? Because there is no real consensus on how these debt purchase reductions should happen.
Yeah, because some say that the reduction, the purchase amount should be 4 trillion yen, and some others said that from 2 to 3 trillion yen. So their thoughts are very split among the market participants at the moment. And also the range of the reduction zones of JGBs, it differs from short-term, immediate term, and some say the extra longer term of the JGBs. So there's no consensus at the moment among the market participants.
Does it make that a little bit riskier in the sense that it could catch these market participants really off guard if we don't have sort of an understanding of where the BOJ could go in July?
It's difficult. At the moment, I think two factors is really concerning. One is the so-called IRRBV, interest rate risk of the banking account, which the most deposit-taking institutions are facing to require. For instance, if in the interest rate hike atmosphere, the liquid deposit, the shift from liquid deposit to time deposit happens, then the liability, duration maturity of life, the liabilities of banks is going to be shorter, actually, because the liquid deposits are at the moment very long in the duration. So if that the shift from liquid deposit to time deposit happens, the maturity of the liabilities is shorter, and that expands the risk of interest rate risk.
Do you have a view as to the least risky balance of timing, pacing, amount, and how they structure this?
It's difficult. I joined the study group of the Ministry of Finance to discuss about the issuance of JGBs, and we made up some proposal that to issue the shorter range of JGBs in the future, and also to promote the sales of JGBs to other investors like individual or the overseas. But it's going to be, I think, the major banks to become underwriter of the JGBs reduced by the Bank of Japan.
I think you allude to the question of who the potential replacement buyers would be and whether they would be able to replace the BOJ.
I think it's going to be the major banks who is going to be underwriters. But as I said, it's the two uncertain factors of financial regulations. One is interest rate risk, and the other one is leverage ratio.
Because, the Bank of Japan has been such a huge player in the bond market, right? We've been calling it the whale.
Exactly. That's really a problem. During the Kuroda regimes from April 2013, the ratio of JGBs held by BOJ has risen from 12% to 54%. It's more than half owned by the BOJ. So it's called, as you said, been called giant whale in the JGB market. So if the BOJ starts to reduce the purchasing JGBs, it's going to be a little bit tiny turmoil unless the BOJ tries to keep the communication very strong, and also the strong coordination between monetary policy and debt management policy is going to be really important.
Ikuko, really great to have you with us. Ikuko Samikawa, who's the Director of Financial Research at the Japan Center for Economic Research. She was also a member on the Finance Ministry's expert panel on bond issuance. Let's get you to some market calls that we're following today. Bloomberg Economics expects that June US CPI reading later on Thursday to be really good. They say monthly headline and core CPI gains were likely as soft as May's due to declining energy and used car prices. A solid reading could also mean that the core PCE deflator due later this month is consistent with policymakers' 2% target.
Analyst at Needham says separating part of YouTube could boost Google shares. They say the move would benefit those keen to invest in YouTube for its dominance in streaming, but also those who admire Alphabet more for its role in the growth of AI. They also believe that the streaming unit is worth at least $455 billion on its own.
Shery, taking a look at some of the tech stories that we're following today, Microsoft and Apple have both dropped plans to take board roles at OpenAI as regulatory scrutiny grows over big tech's influence on new technology. Microsoft invested $13 billion in ChatGPT creator, the ChatGPT creator, I should say, but is now withdrawing from its observer role on the board. Apple was due to take up a similar position, but OpenAI says the startup won't have any board observers after Microsoft's departure.
TSMC says sales for the second quarter grew at their fastest pace since 2022. The sole supplier of NVIDIA and Apple's most advanced chips says revenue for the period increased 40% on year to over $20 billion US. The strong sales figure comes as businesses around the world race to buy up hardware to build up AI supporting infrastructure. We have more ahead. This is Bloomberg.
Well, HSBC is revamping parts of its investment bank in a move that will make it look more like rivals such as Citigroup. Let's bring our deals reporter, Manuel Bagori, who joins us now from Hong Kong. And so this is sort of part of a broader trend, right? Is this because these major banks are preparing for a brave new world where the rate regime is about to change?
Hello, yes, good morning. Exactly. I mean, they are preparing, as you well said, for a new reality, so to speak. But I think the bottom line is deal-making activity has fallen sharply particularly in Asia Pacific, which is one of the core regions for HSBC. And as such, they need to adapt to that, and they are trying to streamline their operations, especially parts of the investment banking business, to be more nimble and more agile, and why not boost efficiencies, right? So that's why they are creating these 5 super groups with the idea of bringing people together and trying to be as efficient and agile as possible.
We're expecting their second quarter earnings later this month as well. How has business been at HSBC in the past few months?
Well, yes, earnings are coming later this month. That might be highly remains to be the actual reporting.
Right, it seems that we're losing Manuel Bagori right now. He's our deals reporter talking about HSBC. But let's move on to the Chinese EV maker Leapmotor, aiming to take its products global after striking a deal with Stellantis, the maker of Chrysler, Fiat, Jeep, and Peugeot cars.
Yeah, Leapmotor chair and CEO Jiangming spoke exclusively to Bloomberg about EV price wars, the impact of tariffs, and yes, taking on Tesla.
In China, we think the price war may last about another 3 to 4 years. Overseas, I think it may take another 5 to 10 years for new energy vehicles to replace fuel vehicles. There are timetables for the United States and Europe by 2035, but I think it may happen faster. When new energy vehicles become popular around the world, the market shares will be more stable. Only then will the price war stop.
Now, Tesla recently got approval to develop its full self-driving FSD here in the China market. Analysts I've spoken to in the United States say that's a game changer for Tesla. But would you say the technology here in ADAS and the other self-driving or driving assistance software in Leapmotor and other products is already advanced to the point where FSD's arrival in this market does not pose a significant threat, or does it pose a significant threat?
As for intelligent driving, Tesla is indeed a pioneer, but everyone is beginning to get closer. Many users in China may know what its functions are and how its performance is. But Chinese car companies may have 3 to 6 months to catch up and become homogeneous with it. Because in terms of overall investment and adaptability to China's road conditions, Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
We all know a key component of your future plans is your partnership with Stellantis. Obviously, they make Chryslers, Fiats, Peugeot, Maserati even. That gives a lot of importance to your export ambitions. I believe this car behind me, the T3, is coming off the assembly lines in Poland as we speak right now. But there are tariffs, obviously, in the EU, upwards of 48%. In the United States, there are tariffs of upwards of 100%. Canada is now talking about tariffs as well on Chinese EVs. How has this changed your export strategy?
It is true that we and Stellantis plan to assemble the entire knockdown parts of Leapmotor T03 in the early stage. We conducted a trial run of a production line and a trial assembly. We will also launch stores and start sales in 9 countries in Europe and 3 other regions around the world in September and by year-end. I think this practice will allow us to move faster than some other Chinese car firms. Indeed, if the EU or other places in the world raise tariffs on EV and impose more restrictive measures, it may have impacts on the globalization of Chinese EVs. But if we look at it from a long-term perspective, this may not mean that it will hinder some progress in the world, whether it is carbon neutrality or the globalization of new energy vehicles. We think this general direction will not change, especially in China. Everyone has seen that in May, this has reached a level of 45 to 48%, and the market share has exceeded 52% in the past 2 weeks. So we think that in the future, the change in China will happen very fast, maybe even in about 3 years. The market of battery electric vehicles plus hybrid models will account for 90% of the total sales. It widens the gap between China and the world on the transition to EVs.
Leapmotor CEO Jiangming there with our Chief North Asia correspondent, Stephen Angle.
And you can watch us live and see our past conversations on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about, plus become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Take a look at how Samsung is trading at the moment. We continue to see gains very close to those record highs. If we close at these levels, that would be a closing record high. But this, of course, as we saw those new products being unveiled in Paris, they hiked prices, and it's all around really the confidence around artificial intelligence and what they could potentially provide when it comes to supplies to NVIDIA in the future. Of course, so far, they've sort of lagged behind their competitor, SK Hynix, in South Korea. They're also facing labor union action. So we'll continue to watch that stock in South Korea as Shift Up is now continuing to trade higher by more than 30%, the second largest IPO this year. This is a South Korean game developer. It's a really there's a lot of optimism about this company. Not just this company. In fact, a lot of South Korean developers have been taken center stage because of potential when it comes to this sector.
Yeah, and of course we're waiting, Shery, and we're just getting the news across the Bank of Korea, leaving its key interest rate unchanged at 3.5%, as expected by all 22 economists that we surveyed, forecasting the BOK to hold their rate at 3.5%. We know that the overall trend of cooling inflation is expected to continue for the BOK as a result of the BOK keeping that rate at a restrictive level of 3.5% since early last year. But we did also hear from the BOK governor talking about the risk of disinflation ahead of that rate decision.
Yeah, and of course, today, what I really want to see whether we get that shift in tone from the governor, Lee Chang-yong, and perhaps even a dissenter for the first time in more than a year that could potentially pave the way for a rate cut in August. We'll continue to watch that decision as it drops on the terminal. But for now, the Bank of Korea, as expected, leaving the rate unchanged.
Let's bring in Gufford Reynolds, who leads our Markets Live Asia coverage, joining us for more. And of course, as at this point in the rate cycle, as with just about every central bank decision, it is really the details or sort of granular aspects of what we hear from the communications that's going to be more interesting.
Yeah, very much so, Heidi. And that's a tribute to, if you think about it, the easing cycle that we're edging towards, well, central bankers are edging towards it, markets are rushing towards it, is at the moment the context is different to what has been the norm, for easing cycles. You think back, over the course of this century, most of the time when central banks have cut rates, they've cut them very, very rapidly because there's been major economic slowdowns forcing them to do that. So far, there are no major economic slowdowns. We had a little bit of a potential rerun for that last year, if you remember, with the banking crisis, but central banks were able to react in a way that put that off the table. So we're kind of, it's a new dance, as it were, between markets and central banks, because the markets are to some extent dancing, if I can extend the analogy, to the beat of the old music, which is when central banks cut rates, they cut it rapidly. Central banks are listening to a different siren call that this time round they can do it gradually because they can achieve that much desired soft economic landing.
We are seeing the South Korean won continue to hold on to those small gains that we saw in today's session, but we are very near to that 1,400 level against the U.S. dollar. How closely is the BOK watching this, especially given the divergence that they might see if they move ahead of the Fed?
Yeah, I think that's a key concern for them. If they get they don't want the currency to gap one way or the other, And the Korean won is gaining slightly today. That's because Powell managed to be very boring and very sort of like not. There's a sense that he was maybe a little bit more open towards the idea that easing is coming. Certainly the market was after he spoke, but he's not making any major steps towards rate cuts. In that situation, yes, it becomes that much more difficult for any other central bank to step strongly towards cutting rates, unless they do face, a clear lower inflationary call, or unless they're willing to be bold in the way that, for example, the Swiss National Bank has been willing to be bold. But the Bank of Korea is being far more cautious. Traditionally, it is far more cautious. So that's why we're seeing, we'll see what we get when they actually comment. But so far, it looks like we're going to get the sort of in line with expectations from the BOK that they held rates. Let's see how much they, if they offer any hostages to fortune when it comes to how soon they could move towards cutting them.
Garfield Reynolds, who leads our Markets Live coverage, there with the latest on the Bank of Korea that's just kept the key rate unchanged. We continue to watch the South Korean market, and of course, one of the biggest players, Samsung, SK Hynix. In fact, when it comes to Asian chip makers, they're really rising across the board. We have seen incredible optimism around semiconductors, around those shipments. South Korea's July exports for the first 10 days rising more than 30%. And we've also heard that Apple is aiming to ship 10% more new iPhones, following, of course, a bumpy 2023 that they had. So what that will mean for suppliers is really what we're watching, Heidi.
Yeah, and that big focus on Samsung, despite, of course, the labour union activity that we've seen earlier this week and continuing on today as well. But we're also watching TSMC, and in fact, the June sales numbers out showing that 3-month figure likely means that we are kind of setting up for that blowout earnings report next week. Shares trading in Asia are looking like this at the moment. US listed shares also seeing that surge, but the APAC Semiconductor Index overall as a cohort, they're up just about 40% now year to date. So we are just seeing this sort of phenomenon of the global bull market that cannot stop rallying thanks to this dual narrative of AI and this hope of Fed cuts as well. That's it for the Asia trade. Our markets coverage continues next.